This is part 2 of our OAS Explainer series. In yesterday's video, we talked about the basics and everything you need to know to understand and get started with the old age security. It's an important benefit. In this video, I'll explain the old age security or OAS clawback, how that's determined, and as well as some points and tips that may put some more dollars in your pocket so that you can get more for your retirement. I'll quickly review the basics in case you haven't seen the video yesterday, but you can watch that over here. The old age security, though it's referred to as a pension by most people, the OAS is actually a social assistance program and it's based on your residency for the most part. You don't make direct contributions to it, unlike the CPP. The current old age security maximum is $713. That's then adjusted to inflation every quarter. That's significant. You need to make sure that you make the most out of that if it's available to you, right? However, this is the maximum amount if you decided to take the old age security as soon as 65. This can then be increased by 0.6% every month if you decide to defer old age security or you waited until you're 70, you'd get 36% more. 36% more, that's a lot. So regardless of what amount you start with, you will also automatically receive a 10% bump up at age 75. That takes the maximum for those that are 75 this year, that takes their maximum to about $780. So what is the old age security clawback? The OAS clawback is a recovery tax. The basic premise is that because the OAS, like I said, is a social assistance program. Why would you need social assistance if you're already earning a high income in retirement? Now, it's easy to think that this should only apply to wealthy individuals, but our definition of wealth should be particular to you. Unfortunately, because of improper planning, even retirees whose family incomes are quite low could still consider themselves to be at risk of having to pay back some of their OAS or get a clawback. See, even if they consider themselves to be modest, even if you consider yourself to be of modest means, you might trigger the clawback if you don't understand how it works. So as of 2024, the current OAS clawback threshold is $90,997. So if your net income exceeds that amount, you're in clawback territory. It's reviewed every year, every time you file. So any dollar over that threshold is going to trigger 15% of OAS clawback. So you actually need to earn quite a bit of money before you fully lose all of your old age security. So this is the formula. Your income minus the threshold times 15%. But how is the clawback actually calculated, right? So your net income includes all this here on the screen. I'll leave it here. You can pause the video. So any income that's earned that qualifies under here would increase your taxable income. All of this can tip you over to the clawback threshold or clawback territory. Let's go through an example. Let's say you earn $100,000. You would have an excess of $9,003. Multiply that by 15%. You would have a clawback of $1,350.45 for 2025. Those adjustments are applied next year because this calculation goes from July this year to June the following year. That's how the payment cycles work. This recovery tax is then prorated and it's taken off of your benefits in July the following year. So whatever your benefit is in July of 2025, it will be reduced by $112.53. This makes sense if you consider that the CRA really doesn't complete all tax assessments until June every year, maybe May. Effectively, they don't know what kind of income anybody has earned until you've finished filing. But here's a few things that you need to watch out for before you retire. This gets a little bit tricky on the very first year you claim old age security. Your clawback from January to June will be calculated based on the preceding year's income. So if you're retiring now and you're thinking of turning on the OAS right away, it'll be based on your filing last year. So if your income was high last year, this could trip you up and may very well put you into clawback territory, or maybe even wipe it out depending on how much income you earned last year. This is where a little bit of planning can help. If your income is going to be significantly over the benchmark, you can apply for an OAS reduction of clawback. The form is on the screen right now and it's also in the link below. If you miss that opportunity and you end up having a clawback the first year you apply, it's not really the end of the world, because the clawback works like an installment. I guess that's how I would treat it. It's an overpayment into your taxes. So it'll be credited to your other tax obligations if you reduce your OAS this year because of the clawback. I hope that was eye-opening. There's so much misinformation shared about retirement, government pensions, and OAS clawback. Now, learning about the clawback itself isn't enough. So I've put together another video detailing the strategies you and your advisor need to walk through to reduce the OAS clawback amount, or to make sure that you don't trigger it and put more dollars in your pocket in retirement. And you can watch that right now, or here, or in the links somewhere in this video. By the way, if this was valuable to you, please do leave us a like, subscribe, and follow for more. Bye!